Alrighty, so I just need to do a quick video to help our psychology as we trade this. I made a post or a comment in the Telegram group earlier trying to calm our nerves because I noticed a lot of people were being disturbed when price seems to be going against the trend. We are eager to trade against the trend. It looks like price is leaving you out of it. But the truth is that that is what the market is out to do. The market is out to destabilize you. I tell you, until you are able to master your emotions, no matter the strategy you learn, you would blow accounts and you wouldn't be profitable. To be profitable, you have to have fixed set of rules, fixed set, and you abide to them strictly. That is your trading plan, right? The trading plan doesn't guarantee that you will win every trade. The trading plan, if it's been properly done to give you an edge, guarantees that you leave the market unscratched over a period of time, not that you win every trade. Right, so I'll give us an example on how to hold our emotions and how you think when dealing with institutional order flow. I'll be starting with Euro JPY, right? You could clearly see, let me magnify this a little, that we were in a downward trend, right? We're clearly in a downward trend on Euro JPY. Let's mark up. I won't mark up the source and all that. I believe you already know. If you are new to this video and you've not seen the source, you don't understand the source, I admonish you to go watch the very first video, BTMM versus ICT, beat the market maker. So right, let's move on. So now we have this low here created by this candle. So what we traditionally would do is mark up that candle, have it as red. These are order block. We would be waiting for price to come in. It's not proper for us to get agitated when price begins to pull back. The strategy itself expects price to pull back. The strategy itself believes that when there's a swing high, there would be a swing low, and we then expect another swing high, with the end of the swing high taking out the beginning of the swing low. So you actually have more money to make or more pips to take from the market from the push up than trading the pullback. Why do most traders lose? We're chasing price. If you want to chase price, you'll most likely jump into this pullback after it has begun, and you get in like halfway, somewhere there. You make some few pips and the market goes against you. We only trade in line with the trend. Whatever happens against the trend, we don't trade. Yes, I taught us a method we could use to trade against the trend, but there was a caveat. The caveat is that you never get to know how far price would retrace to. You could use some ICT methods and try to trade that, but we haven't discussed that yet while studying institutional order flow. So I don't expect us to try to pull out that particular strategy without mastering it. Remember, you win if you focus on what you know. A strategy with set fixed rules that you already understand. So here we have a bearish order block. We traded down. Let me have my period separators on. See if this could give us what I want. Very good, right? So down, this must have been midweek, let's say Wednesday. Now price started trading. Let me even check the time. So this happened 12 noon. That will be about 10 a.m. our own time here in West Africa, right? So price started trading against us sometime at the middle of the London session, right? Now, what I noticed today that I didn't like was that we were so bothered about the push up. We forgot that price is expected to pull back to the order block, right? So when price is pulling back, what you and I are expected to do is to be happy that we might soon have a reason to sell. That is the psychology I want to change by this video. Rather than think that I'm missing out on pips, think of the number of pips you would make in the down move. Why? We expect that this down move should surpass the push-up for it to be a downtrend, right? We keep saying this. For this to be a downtrend, what we expect that if this is a downtrend, then B to C should take out A, right? I shouldn't be bothered about A to B, right? So it pulls back. I shouldn't be bothered about C to D. I should be looking at D to E. C to D, at most, we get to B. At most, we get to B. Then we will ride it from B all the way to E. We will ride it from B all the way to E. If C to D gets to B and stops somewhere like this, we would ride it from D all the way to E, right? If it stops at A, then fine and good, we'll ride it from A all the way to E, E lower than C. So rather than get bogged or bothered about C to D, think of the larger move you potentially could make, right? So let's go back here. Price traded back into the order block. We would look for reasons upon the retest of the order block to begin to sell, right? We're done with that. This was the last, and notice how the sell took out the previous low. Sweet, right? The pullback was 66 pips. The push down, 90 something. I would rather pick 90 over 66. 90 with a lot of confidence than 66, where I'll be scared because I know I'm in a downward trend. Any major pullback, I'm exiting my trades with half the profit I initially made, right? Because I'm jittery. I'm not too sure what price is doing. But if I have a last step broken in my order block, I could almost predict with some level of certainty where price should get to, right? So let's leave that. Now, this is the last bullish candle before this lower low. So next, we'll mark up this, the last bullish candle before the lower low. Notice again, price traded into the order block and did what? Dropped even further, right? Dropped down, didn't take out this. So we still maintain this order block. What does this mean? It means when price traded up, we were looking for reasons to sell from the order block. When we sell, we wait for an LSB, a bullish LSB, or a divergence on the 15 minutes, a bullish divergence to get out of this trade should we not hit our TP1 or major TP, which would be the swing low here, right? If you're a swing trader, just hold on to your trade. It will definitely go down if it remains a downtrend. If it remains a downtrend, and if you lose, you just lose once or twice, then you have the remainder of the trend to make back your money, right? So price traded would have sold, right? And you get maybe if the whole of this move here was say 77 pips, perhaps you took 50 out of it while it was pulling back. Fine and good. Price traded back again into the order block. You shouldn't be bothered about all these moves that happen on Sunday night into Monday. We should be looking at this drop down. That's our priority. And notice how sweet the drop was. Then price gave us this bullish candle, last bullish candle before the drop. So we come into this region, the last bullish candle before the drop, right? You need to have this psychology to be able to withstand the pressure of live market. The live market tries to make you forget everything you learned, and you begin to assume that something is wrong with your strategy, only to come back to mark up and discover that you could have made more if you just stuck with what you know or what you've learned. So price went up. Notice how it wicked above to take out the sell stops, right? The liquidity at that point. It wicked. But we have a policy: never trust a candle until it's closed. This is not a break of structure simply because price, the candle closed back in the order block. Played around for a couple of hours, right? This is 4 by 4, 16 hours playing around, then dropped. We might have had an entry here. So it's either it stopped us out at break even, or something happened. We might have been stopped out at break even, or let's even say you hit your stop loss. Fine and good. But that doesn't change your bias to bullish. This order block needs to be broken. We haven't created a new low yet outside this low. Price traded back into and then gave us a push down, right? Then traded back and then dropped. Now we have a new low here, right? Now we have a new low here. And this was the bullish candle responsible for this low. So we have a new order block. This bullish candle up to the week up there. Now, this was what happened today. We all saw this rally up, and there was so much noise in the Telegram group and everything. EJ is buying, and all hell is about to let loose. Nothing. The push up is just giving us a reason to wait for our signature trade, right? Notice how price traded, wicked down, came back, and went cleanly, giving us a new low, ladies and gentlemen, a new low. Now, let's see how we would have taken this trade. This was our order block, right? This was the order block in question. One of our students told us to make it as a background. So we have, let's change the color to something lighter. So let's say dark orange. So we have this. How would we have entered this trade? We saw this bullish move. It was so strong. It was like all hell had been let loose. It was like price was going to break through. But you need to have a calm, mindset to be able to trade the market. Price traded straight into the order block. What do? We go down to 15 minutes. We go down to 15 minutes. Price was trading back heavily today, heavily into the order block, right? Then what did it do? It got there into the order block, right? Let's make it, because we had 2 entries today. So this entry, I scrapped this entry out in the Telegram group, because some of us might have missed this if you came to your system late, right? You might have missed this move. But let's take this. This was the rally today that got so many people freaking out. All right, so the rally pushed up. It was like, everything is happening. Nothing happened. This is the last candle before the high. The last bearish candle before the high. What do you want to do? You want to mark up the last bearish candle before the high. Just simply mark it up. Simply mark it up. Last bearish candle before the high. Right, we mark it up. Now, why didn't I pick the wick of this candle? Because this is a large zone. Large zone. I picked the body of the candle. Price traded up. I would have been expecting it to take out liquidity here, but they didn't. That's none of our business. The fact is that we'll wait for our signature entry. Right, price traded beneath this, and we have our entry either at the close of the candle or you wait for a retest. Usually, like I said, for a retest, you want to leave 4 to 5 pips away from the box so that if price, you give room for spread, basically. So, stop loss, 50 pips, 66 pips. Once you hit the previous low, which is a swing low, you scale out your profit, right? We're still in this trade. Part of some of your entries will still be in this trade. Say you traded 0.5, 0.5, you'd have scaled out 0.3, you still have 0.2 playing, right? You still have 0.2 playing, and this would have met your target for the day. At least you scaled out some of your profits and you took out the low. As simple as that. If price rallies back up tomorrow, we'll look for another reason to sell. We would only become buyers if price break above this zone, right? 1, 2 candles above this zone, then we become buyers. We never freak out when we see bullish runs. We don't assume that the trend has changed simply because we see movement in the 15 minutes. We need to get that right. We never say the trend has changed because we see some movement in the 15 minutes. Something similar happened to Euro USD too, right? Clean entry here, very clean entry. If we go to the 4 hours, even though I didn't trade EU today, this was the last bullish candle. Initially, this was the last bullish candle. The last bullish candle responsible for that low was this. Notice how price pierced through it, picked out liquidity, almost filled up this fair value. But then it did what? It dropped, right? We didn't have an entry based on our entry technique for this particular trade. But if you're a student of BTMM, you might have gotten an entry when you saw first leg, second leg not taking it out, and a shift, right? You get in here just a little. We still haven't taken out our previous low, right? Here, this was another entry, right? Price weakened above our zone, giving us first leg, second leg, right? See, this was like a head and shoulder, like the Batman. And then we have the shift and we dropped. That was another entry today, right? So all of this we could have made if we were just focused on trading in line with the trend. We might not have the home runs every day. In fact, there are days we'll make 50 pips, and for one reason or the other, we haven't taken care of in our trading plan. It might come back and kick us out at break even. We feel sad, but that is part of trading. We would catch the home run someday if we stick to the strategy, right? So I don't want us coming to the Telegram group and trying to forcefully trade the market. Some of us saw this, even though this is not a divergence and we're willing to go in. Well, you could if you know what you're doing, all right? But the best thing is to trade in line with the trend. If you go down to 4 hours, you see why we trade in line with the trend. Notice how massive these drops had been, which in comparison with the pullbacks. Massive drop, right? Massive drop here, massive drop in comparison with the pullback. Every time we had an order block, right? Price traded into it, dropped, gave us a new order block. Price traded into it, dropped, gave us a new order block. Price traded into it, dropped, gave us a new order block. Price traded into it, dropped, gave us a new order block. Then price traded through it. Now we have a breaker. What do we wait for? We wait for the retest of the breaker and we'll begin to go bullish. Right? It's as simple as that. Let's look at EN as the last example. So in EN, we had a reason to trade against one trend, and the reason is very simple. We said we trade from one source to another. So we had an old source here, right? There's an old source. Let's use the color blue, old source, right about there, right? And this was the other block responsible for that source, right about here. Right, so price traded above, came back here and gave us another source. We don't know what price will do. We just move with it. Whatever it does, we're happy to follow. Then give us a breaker again. Why was that a breaker? Price traded through it. Now, so we had a breaker here. We never had a retest of this breaker and price just traded straight away. So might not have gotten an entry for this trade here. Price came back down for a retest. Price came back down for a retest of the breaker and the source. Now here we have a good reason to want to buy. Why? Even though the present trend as at then was bearish, it was coming into a source, an untested source, an untested source. It came back into it. Price never came back to test the source, right? The previous time. It came back to give it a test and then it rallied. So we would be looking for LSB to go in for a buy somewhere around here. Now price traded back to another source again. Still no need to worry. Price traded back to the next source, gave us an M and dropped now into the source. So what would we be doing? We'll be looking for a reason to want to buy, or we wouldn't buy until we get an LSB. If price trades higher, fine. If price breaks through, then we sell. We lose once a while, but that doesn't stop us from trading what we know, what we have back tested, what we understand. We don't shout because price is going against our trend. We don't take signals from some other person simply because price is going against them. I tell you the truth, several persons you're taking signals from can't show you their live accounts. Just follow the trade, follow the strategy, and we should do it. Thank you so much. Have a nice trading experience.